What is up guys, James here on my channel Developism. Today we are looking at 4 stocks, that's right, 4 long-term investment London Stock Exchange stocks. God, that is hard to say. Okay, so stock number 1 is a company called Unilever. You may have heard of them, but essentially they're an umbrella company for over 400 brands. Founded in 1929 due to a merger of Dutch margarine producer Margarine Unie and the British soap maker Lever Brothers, they now own over 400 brands and are worth over £69 billion or $86 billion. And Unilever currently have a dividend return of 3.24%, which makes them a great company with a good return. So if you haven't heard of Unilever, then you've definitely heard some of their brands. I'm going to put a big list, right? I'll move to the side. I'm going to put a big list right down here. Here they come. There we go. Hopefully that works in editing. So if you want to pause through that video and look through that list, then be my guest. Some of the big brands that Unilever have are things like Ben & Jerry's, Axe or Link body spray, depending on which country you come from, Comfort, Sure, Brute, Cornetto, VO5, Vaseline, Pot Noodles, Tresemme. The list goes on. Okay guys, I just want to stop for a moment to remind people that I am not a registered financial advisor or anything like that. So don't take any of my advice without doing the research yourself, because it's very important that you always do the research yourself.
You all got to work it out for yourself. Yes, we've got to work it out for ourselves.
I cannot stress that more. Dividend number 2. GlaxoSmithKline. Originally founded in 1873 under the name Glaxo, and then later merged with SmithKline Beecham to form GlaxoSmithKline in the year 2000, so technically it's a young company. Focus on pharmaceuticals, vaccines and consumer healthcare. Their current worth is over £800 billion or $100 billion. And at the time of recording this video, they currently have a dividend yield of 4.8%. Now, for a company as big as that to have a high dividend yield and still be making enough on top to reinvest in their own company, they're doing very well for themselves. But once again, reminder, do your own research before going any further into these. I am giving you the most minimal details here. I'm only giving you the highlights. You need to do the research. So dividend number 3, Carnival. No, not that Carnival. That's better. We're talking about a cruise company. Now, what's interesting about Carnival is that it's a British-American company. So the Carnival group comprises of 9 cruise line brands and 1 cruise experience brand, operating a combined fleet of cruise 104 ships. I've written that down wrong. Of 104 cruise ships. Whoopsie. Now, if you do check out Carnival on a brokerage platform like eToro, for example, which is what I use, their dividend yield is scary high at the moment. It's over 18%, I think. That is mostly due to their shares dropping and the pandemic going around. They are going to get hit hard. But remember, this is the biggest cruise company in the world and they will most likely survive this. Because when people think about investing in a travel industry, they normally think an airline. Think outside the box. Get a cruise line. Okay guys, we're finally on to number 4. It's a company called Mundi or Mondi. I'm not sure exactly how it's pronounced, but it's spelled M-O-N-D-I. I've probably put a logo up somewhere. You know what? I'll put it there. Mundi. But with the world leaning towards being more green and eco-friendly, Mundi really stands out as a potential long-term investment, a good grower. It's a leading producer of paper and plastic solutions. Mundi has over 100 sites in 30 countries, and they have approved science-based targets to decrease emissions by 34% by the year 2025 and 72% by the year 2050. And the more people who are becoming environmentally aware, the more vital a company like Mundi will become. and it also has a 5% dividend return, which I really like. Okay guys, I hope you enjoyed my 4 long-term London-based stock exchange stocks for investing long-term. I'm going to come up with a shorter title. But thank you very much for watching, especially if you've made it this far. And it would really mean a lot to me if you gave me a like and a little subscribe. Thank you very much and goodbye.